Hello and welcome to this very special interview. Joining me today is someone who really needs no introduction. He still looks very, very young. He is young, but at the same time, it would be fair to call him the doyen of the real estate sector. Anuj Puri, who's the chairman of Anarock, more than 35 years of experience in the real estate sector. Anuj, it's always a pleasure talking to you. I must say one thing that, have known you for many years, seen you go through long cycles of a bearish market and yet smile. Uh, and so, therefore, it's not surprising that in this bull market, you are smiling. But my first question, one has waited a long time for this. And What kind of bull run are we seeing? All the research reports that are coming out of Anarock are all indicating a one-way, upside really to the real estate sector at this point of time. So just want to understand from you, do you see this continuing? How many more legs does this bull run have?
First of all, Vivek, thank you very much. As always, absolute pleasure to be with you on the screen. To an extent, Vivek, I would say it's an honor to be on the screen with you. It's absolutely. I've seen you do several shows, and clearly the shows that you do, Vivek, are very intense and very educative. So
Thank you.
It is, and that's why I say it's an honor to be on your show. It is true, Vivek, both you and I have seen a number of cycles. It does give us our age away, but we've seen a number of these cycles, and this one does seem to be a little bit more, sustainable, a little bit more having legs than the earlier ones. And the reason that I say, Vivek, is that if the economy stays as strong as what we're looking at, particularly the Indian economy, then hopefully the real estate on the residential side will continue to stay strong. If the global economy goes into a deep recession and perhaps a prolonged recession, then my guess is, I'm not an economist. You are much better at this, Vivek, but I do feel is the Indian economy will get impacted at that stage, and as a result of which the real estate sector will get impacted. Certainly, if the tech companies in the US go slow and layoffs start in large numbers, it will have ramification in the job market on the tech side in India, and it can create nervousness. At this moment in time, we are, however, not seeing that happen. But I do want to start with that caveat is that if it was going to happen, then we may see nervousness within the Indian residential real estate market. On the commercial market, Vivek will perhaps not go too much deep into it today, but it is a market where I would put an asterisk and say it is a market that one needs to watch out for. But today we're going to discuss more residential. So I feel why it is different is this time is there are sort of 5 or 6 things that are going well, and hence this market may sustain the growth. First, unlike the previous cycles, which were largely based on freebies, which were largely based on sort of a lot of the gimmicks that the developers were doing to boost up the sales, this one is not. It's fundamentally very, very strong. No subvention schemes. You remember in Noida, where you're based, Vivek. There were a lot of these schemes that were coming up, and one. Yes, sales is happening, but really this is not sustainable sale because these are all sort of gimmicks that are being done by the developers to entice, the home buyer. So this one is not based on that. Second is that this is all end user. Oh. It is not a speculator here. It is not an investor. This is all sort of being led by end user. Third is that unlike in the past, Vivek, where the prices were just running up, this time the developers have balanced fear and greed very well. So, they are not increasing the price until such time that they are being able to cross the financial closure through the home buyer's money. They have debt that is lined up, but they're not wanting to take debt. They are saying is, let us go out and sell as much as we can. I mean, look at the way DLF did its Arbor launch. It's $1 billion that they did the sale. I mean, it is fantastic. And they didn't hold back. They said, is if we can sell 100% on day one, let's go ahead and sell 100% on day one, which previously would have been, no, let's sell 30, 40%. And then increase the price after 6 months, then sell another 20, 30%. And then toward the end of the project, you deliver the balance. So that is how the prices were going up. This time they are like, let's get everything. If we can sell on day one, let's go ahead and sell on day one. We want cash flows, which are more important rather than necessarily appreciation in the pricing. The fourth one is that the affordability index, and it's an important point, Vivek, is at its 20-year low. Whilst the prices have slightly gone up, mortgage rates have gone up, but the income levels have gone up faster than the increase in the home prices or the mortgage rates. As a result of which, when you would look at the ability of the person to pay the EMI, the index, which we call it as affordability index, is at its 20-year low. So 2004 was the same index where we are today. And then finally, there is a social security angle that has come in this time, which wasn't there earlier, where the home buyer is saying is, I'm not sure that I necessarily want to rent it out. Through this COVID, I've seen is at least the roof over my head needs to be owned by me. And then also many cities, many societies in those cities differentiated between a tenant and an apartment owner. If you were a tenant, stricter rules, which means your house help, friends, relatives couldn't come in. If you were an apartment owner, they would allow through COVID these to come in because they felt is that the apartment owner is more responsible to the neighbors and hence they'll be more careful than necessarily a tenant. And tenants haven't liked it. They've said, look, we're not going to be sort of treated as a second-grade citizen. So we want to buy on our own. And then, that social security angle where the parents are asking the kids that go ahead and buy, where the spouses are forcing their partners to go out and buy, that is where we are starting to see this purchase happen. So I do feel that we don't have speculators. This is end user. This is more sustainable. Prices are not going up. Affordability is still at its 20-year low. And on top of it, after COVID, the social security angle is what is creating this compulsion to buy.